What's up, everyone? Logan Freeman here with Midwest CRE Advisors. Midwest CRE Advisors is a fully tech-enabled commercial real estate brokerage, layering artificial intelligence into every system and process with precision so our team can operate more efficiently and execute for clients in a way that hasn't been seen in this industry before. We utilize a two-phased all spotlight strategy to generate 30 to 50,000 targeted impressions for every project we take to market. We don't just list real estate, we launch it. Today's episode kicks off our Market Signal series, where we break down the data before the crowd reacts to it. And today's signal is a big one because the market has turned. For the last 3 years, commercial real estate has lived in limbo. Pricing uncertainty, frozen capital, buyers and sellers talking past each other. Everyone waiting for rates to stabilize, waiting for clarity, waiting for someone else to move first. But according to the Q4 2025 Commercial Real Estate Market Pulse, that waiting period ended in the third quarter of 2025. Not emotionally, structurally. This wasn't a relief rally. It wasn't a short-term bounce. It was an inflection point. And that distinction matters because markets do not turn when everyone feels good. They turn when risk becomes measurable again. The data shows that Q3 2025 delivered one of the strongest quarters since 2019. Transaction volume increased. Dollar volume jumped more than 20% quarter over quarter and more than 25% year over year. That's not testing the waters. That's conviction. Here's why that matters. Volume without velocity is noise. Velocity without pricing is speculation. But when pricing, volume, and capital all move together, you're not watching a head fake. You're watching a regime change. Let's talk about pricing. Across every major asset class, median pricing reached post-COVID highs. Multifamily pricing rose more than 17% year over year. Office nearly 15%. Retail more than 12%. Industrial over 14%. And here's the part most people miss. Prices are rising even though transaction volume has not fully returned to peak levels. That tells you something critical. This is no longer a distress clearing market. This is a quality-driven market. Buyers are paying premiums for assets that work and punishing assets that don't. Now let's talk about what I believe is the most underreported signal in the entire report. Transaction velocity. Nearly 46,000 properties changed hands in Q3. Capital is not drifting back into the market. It's moving with intention. Velocity is confidence in motion. Capital does not move this fast unless decision makers believe risk is being priced correctly. And right now, they do. Here's the cleanest way to understand what's happening. The market has shifted from price discovery to price acceptance. For 3 years, buyers and sellers argued. Now they're transacting. That doesn't mean the market is frothy. It means it's functional again. And functional markets reward preparation. This shift matters depending on who you are. If you're an owner, unrealized appreciation is beginning to rebuild. If you're an investor, competition is returning faster than most people expect. If you're a broker, hesitation is now a liability. Inflection points do not wait for consensus. They reward the prepared. Here's what smart operators are doing right now. They're not rushing, but they're not waiting either. They're refinancing quality assets. They're lining up acquisitions before cap rates compress further. They're positioning portfolios for 2026, and they're using traditionally quiet quarters to prepare for what's coming next. This is not the time to sit frozen. It's the time to be intentional. Markets reward people who move early with discipline, not people who wait for perfect clarity. If you want to talk through how this shift impacts your portfolio, your pipeline, or your local market, reach out. You can call or text me directly at 573-694-9669. You can email me at logan@mwcreadvisors.com or visit us online at www.mwcreadvisors.com. In the next Market Signal episode, we'll break down the return of capital, why institutions and banks are back, and what that means for buyers, sellers, and borrowers as we navigate 2026. The market is moving. The only question is whether you're moving with it.